Carl Icahn rarely minces words, and in a new video, he warns of a looming economic catastrophe, and just about everyone is to blame. Our own Stephanie Ruhle joins us now. Carl does not mince words.
He's not to blame. Listen, the world, according to Carl, while Carl is saying he backs Donald Trump as a presidential candidate, what he's also doing is looking at the markets. And he is saying Wall Street is irresponsible in the way they are selling securities to individual investors. He's saying the Fed, having us addicted to low interest rates, has pushed unsophisticated investors into sophisticated financial instruments. Let me take you back to 2008. Take a quick look.
Wall Street does what Wall Street does best. It sells securities. I used to laugh with some of these guys that sell these bonds. I used to say, you know, the mafia has a better code of ethics than you guys. You know you're selling this crap, and you keep selling it. And in fact, you're shorting some of this. And that is really what's going on. And it's just deja vu.
Now, this is the world according to Carl, and he's really pointing at the high-yield market, which, if you take back, they're called junk bonds for a reason. And his concern is, as the market turns, when rate goes up, when volatility spikes, and investors want to pull out, they're not going to be able to, which is where we were in 08. What he isn't mentioning, though, in 08, the market was highly levered. Banks had massive positions on. People are much more limber at this point. Carl disagrees. He's pointing the finger at investors like BlackRock, saying you're only worsening the problem.
If Carl Icahn is accurate, is there something that's going to change because of intervention, let's say, by the government or by regulators? I mean, isn't this just the normal function of the market? They sell and they move on to something else. They sell it to you, and then they find another thing to sell to you.
What does Carl want to do? He wants to be the guy ringing the bell right now, so a year from now he can say, I told you so. This was going to happen. Now, we've heard from a lot of investors over the last few years that warned about the fundamentals of the market, whether we're talking about China, Europe, or the U.S.
Well, you talked about this when they started quantitative easing, right? I mean, you talked about how low interest rates were going to put mom-and-pop investors take their money out of their CDs, out of their savings accounts, because they're not getting anything.
To.
Right.
Listen, in 08, it made sense, and Carl agrees. What the Fed did was stepping in and rescuing was fantastic. But at this point, why haven't they raised rates? The unintended consequences of keeping rates where they are could be far more damaging. I mean, listen, the Fed can say to us, we're data dependent. They've always been data dependent. It's time to pull the trigger.
He wants to help the Treasury Department as well. He wants the IRS to help Treasury. How exactly is this supposed to happen?
Listen, Carl wants to help. Carl believes in a free market system, right? Carl believes lets everybody do their good business, put yourself in the ring. But the fact that CEOs are sitting there, in his words, like a fat cat, not doing much while they're sitting on piles of cash, he doesn't like that. And whether you like Carl or not, you have to say he has forced corporate America, the C-suite, to be more accountable. If you don't think that corporate boards and CEOs are worried about activists stepping in, saying, what are you fools doing? Trust me, they are.
Why is he backing Donald Trump?
Because he feels like he wants someone who talks turkey. He's not saying that Donald Trump is the ideal candidate. And whether Donald Trump has $3 billion in the bank or $10 billion, Donald Trump is not afraid to use the phrase, you're fired. And Carl likes that.